Um, Hello, traders. How are you guys doing? I hope you guys are having a very great weekend. Um, Today, we are going to be talking about ranges, just as we did in our previous class. We'll still be talking about ranges. So, in our previous class, we talked about structural ranges, and then we now said that in our next class, which is this one, we are going to be talking about internal and external range liquidity. But I want to still emphasize on something. I want to still talk about ranges. Sorry, let me this. Let me use my board. I want to still talk about ranges in relation to internal and external range liquidity. Internal and external range liquidity. So, in relation to both internal and external range liquidity, now first thing I want to talk about, since we are dealing on structure, is this: the logic behind this higher highs and this lower low, and the logic behind these lower lows, lower high, lower low, lower high, lower low. The logic behind this is this. Okay, why not the market? Why shouldn't the market just keep going like this for a very long time, maybe for some months? Then the market will start doing something like this for some months. Why is the market doing this? Sometimes you see something like this. Why is the market doing this? Let me remove most of this. Why is the market always doing this? What is the logic behind it? What is the reason behind it? Sometimes you see the market creating high, low, high, low. Next thing you see is this. This low will fail, and then price will now start doing something like this again. Now, what is the logic behind this? Why is the market always doing something like this? There is a simple logic. Let me call it just a simple logic yet. There is a simple logic behind it. It is simply price seeking for liquidity. Price seeking for liquidity. Now, we are talking about internal and external range liquidity. Now, when you say internal, if you draw something like this, anything within this range is called what? Internal. Now, anything outside this range, outside here, is called what? External. Just as it sounds, when you say internal range liquidity, it simply means anything inside here. When you say external, it means anything outside here. Now, add liquidity to it. Now, what is liquidity? We know that liquidity is money in the market, right? Liquidity is where the money is sitting in the market. So you can just say that internal money and external money. Now, the logic behind this internal and external range liquidity is this. When you see price create a higher high, a higher low, and then a higher high, causing a break of structure here, this is not just a higher high, and this is not just a strong low. Now, why are we expecting price to give us a retracement here like this so that we can start buying? It is because of the market. When the market is bullish, the market comes back to grab the internal liquidity and then go straight for the buy side liquidity. When the market is bullish, just try to imagine this. Now, this leg you see here, you see something like legs here. There will be legs here like this. A lot of people's stop loss are here. A lot of buy order, sell order, buy stop are in this place. All these zones here. That means there is money here. So when the market comes back like this, the market is not just making a retracement, it is actually coming back to grab all this liquidity here. If not all, since this place is a protected low, the price might just grab some liquidity, come down to this zone. Once the liquidity is enough to fill a lot of buy orders, or once the liquidity is enough for price to start buying, then you now see price doing something like this. Now, once price is going up, the next draw on liquidity will be where? This high. Now, what am I trying to say? I'm trying to tell you that automatically, when you have a structure like this, when you have a structure like this zone here and this zone here in a range is your external range liquidity. Is your external range liquidity. Then anything within here and here, anything inside of this place is your internal range liquidity. So now in another sense, now look at this in another way, you'll find out that price always take out the once price take out the external range liquidity. Now remember that this high here was once an external range liquidity. Now, okay, just imagine this. This high here is an external range, this high is an external range, and you have a lot of internal range liquidity here. Price came down, take out the internal range liquidity, and where is the next target? What? The external range liquidity. Now, some of the time where you will see a break of structure to the downside or a change of character like this, what actually happened? This zone here is also an external range liquidity. So even for the fact that this place here, maybe you have a key level here and this zone here is a strong zone, right? You can call it a strong swing. Why? Because it swept a lot of liquidity and caused a break of structure here. So it's a strong swing. But yet, that same place, it is also an external range liquidity. So automatically, price move from what? Internal range liquidity to what? External range liquidity. Or internal range liquidity to what? External range liquidity. There's liquidity here, there's liquidity here. Now let me use bearish structure to still explain this. Let me use bearish structure. You had a break of structure like this. This is your strong high, and then this place is your external range liquidity, and this zone here is also an external range liquidity. Anything within here is your internal range liquidity. Now when price is making retracement like this, price is moving from where? External towards internal, and from internal towards external. I hope you now understand the logic behind this movement. Why you see price, when price buy, price will make a little step, or price will take a little step backward, and then it will start going front again. Same thing for the sell part. When price is selling, price sell, and then buy a bit. Sell, and then buy a bit. Now, time frame. Now a lot of you guys don't know this, but now time frame. Why did I talk about time frame? The time frame you use to identify your external range liquidity is very important, and the time frame you use to identify your internal range liquidity is very important. Believe me or not, when you are in a daily time frame, let's say that this is a daily time frame, it will take weeks for this swing like this to happen. It will take weeks. Just imagine that one candle, one day. This will even take up to 2 months for this structure like this to form. It will take up to 2 months for this structure to form. Now, same thing when it comes to 4 hours. This might also take days for this to form, or even a week or 2 weeks for this structure like this to form. You can still call this your external range and external range liquidity, right? Now, when you go to 15 minutes time frame, or you go to 5 minutes time frame, when you still have a structure like this zone is also an external range liquidity, and this zone is still an external range liquidity. Anything within here is what? Your internal. Even though you go to 1 minute time frame, this is your external and this is your external. Now, time frame really matters when it comes to liquidity. If your 1 minute time frame has a structure like this, and this is also called an external range liquidity, can you compare this 1 minute structure to a 4-hour structure? No, you can't compare it. Why? Because of the time interval. Now, why I'm emphasizing more on this time frame is because we are day traders. Now, as a day trader, your middle time frame should be between 4 hours to 1 hour, or even 30 minutes as a day trader. So when you are looking for your external range liquidity, you should look for your external range liquidity around what? Around your 4 hour or your 1 hour, or even your daily time frame, not on lower time frame. Even though on your lower time frame, your 15 minutes time frame can still give you that external range. Now, take for instance, just imagine that this is your 4-hour time frame, and then on your 4-hour time frame, this is an external. On your 15 minutes time frame, you might see something like this, and then you now say that, okay, the market is bearish. This is my external, this is my strong swing, and this is my weak swing. Now, when the price is bearish, most of the time price take out the sell side liquidity, and when price is bullish, it takes out the buy side liquidity. So now I just want you to try to imagine this. Now, this is your 15 minutes time frame. Maybe I should use red. This is your 15 minute time frame. You got a break like this and a retracement. You now say that, okay, price have taken out internal range and you're expecting a break like this. What if on your 1 hour time frame, or 1 hour time frame, you then, this whole move you see like this on 15 minutes, it is just one single candle like this, and then price is planning to tap into somewhere here to start buying. You see that you fall into that trap. I don't know if you understand. You fall into that trap because you might be expecting price to do something like this and go down, whereas price is just making a short retracement, to tap into this zone and zoom. So just don't try to get confused. But on any time frame you are, your external and internal range liquidity is still there. But what matters the most is the time frame in which you use it. So you use it on a more higher time frame. Now on this 4 hour time frame, I have something like this, and then price is coming down. I might just be trading 4 hour like this. On my 4 hour time frame, this will be my strong high, a break of structure. I'll just be trading 4 hour like this, because I know that the next draw on liquidity is where this high. Let's say price comes to a key level here, and then this place failed. This is stop hunt, a break of structure to the upside. If I'm buying, I know that the next draw on liquidity, or the next major external liquidity that price will be targeting, will be where all these highs. Remember that both the high and the low, or the low and the high, has external range liquidity sitting there. But when price is bearish, price go for where the liquidity at the sell side. That is the liquidity down here. That's why you see mostly break of structure to the downside. And when price is bullish, price goes for the liquidity above. That's the buy side liquidity. If I'm taking a buy from here, my overall target will be where? This high. And a lot of people will be confused. How did I know that this price is coming to this zone? We are all trading liquidity in this market. I hope we understand. So when trading liquidity, or when looking out for liquidity, time frame really matters. So for me, I focus mostly on 4 hour and daily time frame. So when I go to 1 hour, or I go to 15 minutes, then I'll be looking out for this setup. I hope we all know this setup now. Inducement, break, sweep, break, inducement, POI. We all know this setup. I will be looking for this now on 15-minute time frame. That is, I'm expecting price to take out this internal range liquidity here, and then this external range liquidity above here, which a lot of people's stop loss will be price should take it out, tap me in, and then withdraw like that. When I'm down close to any of this zone, I will wait. So in our second class, I guess, or the first class, the second class, where we're talking about structure. We're still talking about structure. Then I told you guys that if this is my 4-hour time frame, and I'm expecting retracement like this, once price come to the 50%, if I'm selling from here, I'll stop selling, because I know that from the 50%, price might buy from any key level there. And then the break, when price give me a full retracement like this, when I'm looking for a body break on a 4-hour time frame, let's say I have a break like this, the break must align with 15-minute time frame. Let me tell you why. I know a lot of you guys didn't understand what I was explaining when I said that it should align with 15-minute structure. Let me draw 15-minute structure for you now. Break of structure, inducement, then we drop again, another break, inducement, then this. Now there is possibility that when price tap into this POI, and then you get a body break like this on 4 hours, on 15 minutes, this might just be an inducement. You know this this pattern. On your 15 minutes, it might just be something like this. Price expecting to take out this place as an inducement, tap into this zone to start selling. While on your 4-hour time frame, if you look at a body break, for those of us who knows MS and ARC very well, if you look at a body break, you see that there's a break here on 4 hours, and a lot of you guys will now say, oh, price has changed direction. Whereby on your 15-minute time frame, this is just a sweep of liquidity, and there will be a POI here, and most of the time you see price will now do something like this. If this is a key level here, price will now do like this, and price will liquidate you. We are talking about liquidity. how to understand liquidity. And if you understand structure and you don't understand liquidity, then it's as good as saying you don't know anything in the market, to be very sincere. It's as good as saying you don't know anything in the market. So that's just it. Anything above here is your external, and anything within here is your internal range liquidity. So now have this at the back of your mind, that when trading liquidity, you should trade it at a higher time frame. Understand the higher time frame liquidity, and then you know where the lower time frame is going. Now most of you guys struggle with buyers, and that is because you don't know where the market is actually going to. You don't know where the market is actually going to. The market might be targeting this. Let's say the market might be targeting this leg here. Let's say this is your 4 hour. You have something like this. The market might be targeting this liquidity here for inducement, and then a POI here. Then a lot of you guys will expect the market to come here. I want to buy from here. I want to buy from here. That's how price will give you a reaction like this, then liquidate you. Now, at the same time, on your lower time frame, you will then have something like this. Maybe on 15 minutes, you're having something like this on your 15 minutes. While on your 1 hour time frame, this is just a swing low, a swing high, and just one single swing low. Then a lot of you guys will now be expecting price to buy, to sell, continuous sell from here. Price will liquidate all these people here. I don't know. I just want you guys to try to understand this. Even though we didn't learn anything much today, but just try to understand this. That if you understand higher time frame, you will know what the lower time frame is doing. Let me still redraw this again. Most of you guys have been victim of this. This is 4 hours. And then this is your 15 minutes here. This is your 15 minutes, giving you breaks here. And then let me use black for 1 hour. This is your 1 hour. Your 1 hour is just a single leg like this. Now most of you guys will now be expecting this on your 15 minutes retracement here to sell, whereby your 1 hour is having an inducement here. Your 1 hour is having an inducement here. You now see price will come back like this, sweep everybody here, tap into a zone here, and sell. So just understand liquidity on a higher time frame level, then you will be able to know where the market is going on a lower time frame. You see that even though we analyze from monthly or weekly, we have to still take our trade on lower time frame because we are day traders. So let's go to the charts. Let me show you guys just a quick example. Now look at this structure. Look at this structure. This place here is your external range liquidity. This is your external range liquidity. All this leg here, your internal range. What happened? You see that price came down, sweep most of all this liquidity, and failed to give us a break. Price failed to give us a major break of structure. Select another one. Maybe use one there. Price failed to give us a break of structure here. And look at what happened. After price swept it, it came back, swept all this liquidity, including this low. Once the liquidity was being swept, price changed direction immediately, and then start buying from here. Now if this was your let's say if this is your 15 minutes or 30 minutes, you will not know that everything that is happening, this whole sell, my network is lagging. Okay, Now, let's say you are focusing only on 30 minutes or 1 hour or 15 minutes, you will not know that this whole cell, this whole cell that started from here, it is because Price didn't. If Price gave us a break of structure, a proper break of structure here like this low here will be a protected low, this low will be a strong low, so Price can just come here like this and buy. But since this zone, Price didn't give us a clean break of structure here at this place here, that is why the market then used this low as liquidity, and it then came back. This low is an external range liquidity on a 4-hour time frame. This low is also an external range liquidity. Price came back, swept the liquidity around that zone, because a lot of people will still be expecting Price to come here, let's buy. Price took everybody out, and then you can see the momentum. Once Price have taken out liquidity here, the force that the market will use to start going in the opposite direction, if you see that force, you know that yes, the market have taken out liquidity. So I'll just use this one example, and then let me talk about Asia. Now, for those of you guys who don't know, Asia range liquidity, or Asia itself, is between Sydney section and Tokyo section. Now, but for if you trade SMC, if you trade ICT, you know that Asia is between New York evening to New York midnight. So for those of us that use West African time, it's mostly between 12 a.m. in the morning down to 5 a.m. Now, within this particular time, the markets range a lot. So most of the time, if let's say you are buying, or let's say this is your 4-hour structure here, and then Price is retracing like this little break here, you now go to your 1 hour. Your 1 hour time frame, it is a big structure like this. Let's say it is a big structure like this. And then your 15 minutes, you have something like this. Okay? Or let me just use 15 minutes so I can explain Asia. So let's say this is your 15 minutes like this. Now, you see within 12 a.m. down to 5 a.m. in the morning, or 6 a.m., the price doesn't usually have that momentum, especially you see on Euro USD, GBP USD. Most of all these what do I call it, let's say most of all these major currencies, within that time they are usually slow. So now let's say within 12 o'clock to 5 o'clock, price is ranging like this, just giving you something like this. Now you see this high and this low within that particular hour is your Asian range. Most of the time during London Open, price usually sweep it, then tap into your POI, and then you see the drop. Let me show you this in the chart. Let me remove all this so that I can show you guys a proper example. Look at this. You see all this what do I call them? All this, is a logo or what now? All this price action that you see a chart like this, these are all Asia. I actually use an indicator that marks Asia for me automatically. These are all Asia. Now watch this. Now watch this. This is 30 minutes. there was a break of structure like this, and then look at the time here, 12 o'clock a.m. down to 6 o'clock or 5 a.m. Now you can see that the market is a bit slow around this zone. Look at what the market did. The market came back, swept it, tapped into a POI, and then price zoom off. Now there was a time I taught you guys about strong Asia and weak Asia, where I said that it is not all Asia range that is being used as liquidity. Look at another place here. Look at Asia. Price is reversing. You see that price swept Asia and then zoom immediately. Look at this zone here again. Price is still bearish. Price swept Asia. So if you wanted to be selling, you sell from here. And where you target the nearest zone. This is Euro USD. Look at it. Price swept Asia again and zoom. Look at this zone again. Price is still bearish. Now we know that price is bearish, right? Look at this zone again. Look at price swept Asia. Look at the sweep. This Asia high. Once price sweep the Asia high, the next target will be where? The Asia low. This is the low here, and this is the high here. So if you are trading this in line with where the market is going to, that is where it's going to work more for you. So it's not like price is bearish and you are trading Asia, the buy side. It's not going to work for you. Just look at all this place. You see that price is bearish. Look at Asia high. I'll join it with this high. Look at this high also. You see that this high didn't break any structure, so it's also liquidity. Look at Asia high. You just look for a close POI around that zone. See this breaker block, this failed order block. Look at. So those of you guys who have been seeing my chat or in my Telegram channel, you know that I use this a lot. You see this zone where price is reversing like this. You see that price didn't use it anymore. Yet the low, price will still come back to the low. Now I'm not going to talk about strong Asia since we are talking about liquidity for now. But you can go and watch my previous video. You see videos that I made on strong Asia. That it is possible that you use Asia as your POI. It is possible that you have an Asia that swept liquidity and broke structure. This Asia is referred to as a strong Asia. So we are still on liquidity. I hope that you guys now understand both how to know your internal range and your external range liquidity. This is really nothing that hard. You just have to understand the market and know the direction. Let me analyze the market. Let me just open a fresh chart and just do an analysis for you to see how I do analyze the market and how I find my buyers in the market. You know that those people who say they don't trade liquidity, everybody in this market or in this industry, we trade liquidity. And let me clear everything. Now let me show you guys how I do analyze the market. Now first, I use key levels. A lot. If I want to analyze the market, I go to the monthly time frame first. What happened during the previous month and what happened in this current month? What is the market doing? If you look at this price action, you see that price is ranging around here and also ranging around here. This place and this place, there's a range there. But now we are not swing trader. We are not going to talk about what everything that happened here. Because if you check from this place here to here, this is 1 year. Or to here is 1 year, and from here to here is the beginning of 2025. So we'll not talk about everything that happened around here, but we'll talk about the recent thing that happened. Now on a monthly time frame like this, I look at the candles a lot. Let me start with this. Okay, I should still remove all this. Now let me start with this. This candle here, this bearish candle here is February. This is February candle, and this next one here is March. Now I told you guys that price moved from where? External to internal and internal to external, right? Now look at this previous structure here. You see series of buy candle, and January buy candle. Now once February started forming this bearish candle, I know that this is just a retracement. Now price is coming inside the internal structure. You see, after this bearish one, you see the next one is also a bearish one. Look at it, swept this low. Now I was also expecting April, that's this candle now is April, to just give a little pullback and still close bearish. But when I saw that April is now buying, price is buying from here. I'm just explaining these candles for you guys. I know that okay, this high here is an internal range liquidity, and on lower time frame there is others liquidity sitting around here. If you see, look at price came back and swept the internal range liquidity. After this internal range liquidity has been swept, you know that the next external range liquidity is where? Around this high, or where? This low. Look at what happened. You see this bearish candle swept the high of the previous month. That is May candle swept April, and then last month, which is June, came down and swept all this one. Now what happened now? This low was an external range. Once the external range have been cleared out, where is the next target? The internal range. Look at the high of last month. It have been swept. This is the internal range. Now there's two things now. Either price give us a change of character around here to start selling, to take out this next external, or price will still take out this high, and this high is an external range, don't forget. Or price, this month candle can just, okay, this is still July, so let's talk about August, since we are in another month now. August candle might open from here and take out this external range, or what? This external range, since the internal range have been taken out. This is just clean internal and external range liquidity. But let's go to the weekly time frame. What is the weekly doing? Where is price coming from, and where is price going to? Let's look at what happened previously. This low was swept. This low is an external range liquidity. It was swept. Now let me see 1 hour first. Not just swept, I then have a break on a 1 hour time frame. Look at it. That means this is the point where price was coming from. Price is coming from this place. Price is coming from this place. So now I know that since price have taken out this external range liquidity here, the next target after this external range will be what? The internal range. The internal range. You see why price brought up to this zone. And now have it at the back of your mind that this high is also an external range liquidity. What happened? Price have taken it out. After price take out that liquidity, it started selling again. Right? Now let's see 4 hours. In 4 hour time frame, what am I going to look for? I'm going to be looking for structure now. I'm going to be looking for structure now. What is structure saying? This is the last protective low that was taken out, and we got a break to the downside, whereby giving us a change of character break. Now I now know that there's two things now: either price hunt for this high or price will hunt for this low. But for now, if I see buy opportunity here, I'll keep buying. I hope we understand now. Now, what do we have up here? Let me go back to daily to look for a key level. A key level. This whole candle here, I would have marked this big bearish one, bullish one, but the candle is big, so I'll use this candle. This whole zone here is a demand, and on your 4-hour time frame there is a key level here. There's a key level around this zone. On your daily time frame, this is a key level here. So this means that there is possibility that price might want to sell from here. I hope you guys just see how I do make my analysis. So you start from a higher time frame. Once I get this direction, when I come every day, I'll just go to daily time frame, look at what the new day candle is doing. I just go to lower time frame, start looking for what entries. So this is how I do my analysis. For now, we are going to stop here, and then probably we'll continue tomorrow. So you guys should take care of yourself and have a very great day. I hope you guys learned something today. Bye.